Hello and welcome to the Of Interest podcast. I'm Gareth Vaughan from interest.co.nz. Last month, July, was the world's hottest month on record. It certainly didn't feel that way here in New Zealand, but we've had our share of extreme weather, with many of us in the North Island sick of the sight of rain after an incredibly wet year to date. New Zealand has, of course, signed up to the Paris Agreement that aims to limit the global average temperature increase to 1.5 degrees Celsius above pre-industrial levels. And we're striving to reduce net emissions of all greenhouse gases except biogenic methane to zero by 2050. In a previous episode of the Of Interest podcast, Climate Change Commission Chairman Rod Carr said, "I would not underestimate the challenge that humanity faces in decarbonising our livelihoods and lifestyles. And achieving this certainly requires a big effort. So given the key role they play in the economy, can banks contribute to this, and if so, how?" To discuss this, I'm joined by Rebekah Cain, who is BNZ's Chief Sustainability Officer. Hi, Rebekah, and thanks for joining us and welcome to the Of Interest podcast.
Hi, Gareth. Thanks for having me today.
One of the things BNZ has done to help fight climate change is become the only New Zealand bank to join the industry-led United Nations convened Net Zero Banking Alliance. When this was announced, BNZ's CEO Dan Huggins said, "Joining the Net Zero Banking Alliance shows we're serious about leading efforts to lower emissions across our operations and all our portfolios." So obviously some ambitious and lofty and admirable goals there. So Rebekah, can you tell us, to start with, what is the Net Zero Banking Alliance?
So the Net Zero Banking Alliance is a group of banks who, around one of the conference of the parties, so one of the COP meetings, committed to transition the finance sector to net zero. A part of the reason for this is because if something is funded, it happens, and if it isn't funded, it doesn't happen. So Minister James Shaw, as well as Mark Carney, who was the ex-governor of the Bank of England, have all sort of talked about finance being the main lever that is needed to be pulled in order to start to shift the real economy. And so the Net Zero Banking Alliance provides a platform to demonstrate leadership in this area, but also to really come to grips with the challenges of trying to understand what decarbonisation means for a bank. It allows us to have access to expertise and frameworks that are internationally recognised. And it's a real capability building and group of people who are all trying to achieve the common goal of decarbonising the global economy.
So obviously BNZ's parent National Australia Bank is also a member, as are the parents of New Zealand's other major banks. So ANZ New Zealand's parent, ASB's, Westpac's parent, and also the Dutch parent of Rabobank, the rural lender that we know well in New Zealand. So was this a case of BNZ wanting to follow NAB, or, I guess, why did you want to join on your own as well? And what are you really hoping that being in this group is going to achieve for you?
So one of the reasons why BNZ decided to individually sign up was because the emissions profile of New Zealand is significantly different from the emissions profile of Australia. And as a result, the BNZ financial portfolio is significantly different from our parent company. We also have a different brand name. And so in order to show leadership and be able to frame up what BNZ is doing for New Zealand and its customers in New Zealand, we felt it was important for us to have our own identity in the market in this respect. And the way we can sort of see that coming through is that part of the Net Zero Banking Alliance requires you to identify which portfolios are your most material to decarbonise. For NAB, that is very much looking at fossil fuels. And while that is important for us to say that we are making commitments in the fossil fuel area and are supporting our customers to decarbonise, the dairy sector is really where things sort of hit hit the pointy end in New Zealand, and also residential mortgages and transport. So in order for us to be able to signal really early on to the New Zealand market where BNZ wanted to focus its efforts, we thought it was important for BNZ to take that individual step to sign up.
And along with your membership of the Net Zero Banking Alliance, there's a targets disclosure statement, which has quite a lot of detail in it. And this outlines how the bank has a set of targets for a range of industries. You mentioned dairy, which is a very key one in New Zealand, coal, mining as well, power generation, and oil and gas. So can you tell us a little bit about why these industries are the key ones that you've got in there, and a little bit of detail on what the targets are?
Yeah, sure. So why we chose those ones were we actually have had a commitment since 2019 to exit all coal mining. And so we didn't really need to do any work. That target was there, and it was really important for the market to know that we had very early on made a decision around that wasn't an industry that we wanted to continue to support. It's a sunset industry, and we wanted to signal really early on to the market that that's where we would be going. Oil and gas, again, is a tiny percentage of our portfolio, but is a industry that when you talk about decarbonisation, it would seem to be a bit amiss to not have addressed what you're going to do in that area. So those were coal and oil and gas just seemed to us to be really important portfolios for us to tell the market what we wanted to do and how we were going to do that. And then if you look at power generation and dairy, they were assessed by BNZ as being really key sectors to decarbonise and to support in decarbonisation. We hear a lot of conversations around how we need to electrify, and we need to make sure that the power generation sector is supported to create the renewability in that industry, rather than sort of relying on fossil fuels or whatever else it needs to for energy security. So it was really important that we went out to the market saying, this is a key industry. We need to make sure that you guys know from BNZ's perspective, we support the industry, but we want the industry to be making some changes. We've publicly stated what our expectations are of our customers, and we will be assessing our own performance against how we're supporting you to make that transition. And I don't think we need to really go into a lot of reason as to why we chose dairy. That seems to be the single biggest conversation point in New Zealand. What are we going to do? How are we going to do it? There is a lot of uncertainty in that market. There's not only sort of pressure from funding, there's also pressure around market preferences, government policy, technology developments. You look at the EU free trade agreements and what that means for carbon border adjustment taxes, what it means for companies like Nestle saying, we're really driven by what you're doing from an emissions perspective. So it was really about saying, we are supporting you. We will be here for our dairy customers. But there are over 7,000 of you, and we need to start now having those conversations and understanding what you understand about your business so that we can best support you to make the change that's needed if we need to get to hit those targets that we have for 2030. So I guess overarching all of it is the sooner you come out with a really clear direction and really clear expectations, the more orderly the transition is going to be.
Yeah, and I mean, BNZ is the country's second biggest agricultural lender. I think last figures I saw, more than $13 billion of lending exposure. Now that's not all to dairy, but I'm assuming dairy is a pretty big chunk of that?
Yeah, it is. It is a really big chunk of it, and it is also a part of the market that is very in tune to the New Zealand societal expectations of what's going to happen to them, and how they're really being pushed to step up. And I think often we get sort of pulled down by some of the negative connotations, and a small part of the sector that is not embracing the change, but actually BNZ has amazing customers making significant change, and a lot of that is needing funding. It needs funding to change. We can't do this transformation without it. We need our bankers to fully understand that this is the direction we want our customers to go, and to be those real advisors that can help them understand what they need to do, what they need to address, and what funding is available by BNZ for them to make that change.
In your targets disclosure for your Net Zero Banking Alliance participation, it does say that the dairy sector contributes 23% of the value of annual exports and 22% of New Zealand's gross emissions. So that gives you the context, I guess, that this is a big, important sector to the economy, but also it's a bigger emitter. So some of your targets, I just thought dairy is the key one, as you've said. So we'll just drill a little bit into your targets there. So BNZ's dairy emissions reduction target is an 11% reduction in financed biological emissions intensity by 2030 against a 2022 baseline. And the assumptions that you have in there include that dairy cattle numbers reduce by 13%, milk production reduces by 4%, and nitrogen fertiliser use falls 20% from 2019 levels. So is all this achievable, and is it enough?
Yes, it's achievable. When we were setting our targets, we were very much focused on ambition and achievability. So it needed to be both of those things. We couldn't set a target that was so ambitious that we sort of lost the room, so to speak, and that people wouldn't engage with us and were thinking that we were sort of being unrealistic about what could be achieved. Equally, we needed to say this is the direction of travel. We will be making this change. And we will constantly reset and reassess our targets. So these are not set and forget. So we've set them at that 11% reduction based on the information that we had available to us in February. Now, we need to understand what our producers are doing and the expectations that they are also putting on the on-farm emission requirements. We need to understand what the biggest purchases of the product, so again sort of alluding to the expectations of Nestle, and every year we will be reassessing to make sure that our target is remaining ambitious but achievable within the context of whatever those changes are. But I think the main point for us is the climate's changing. We have to adapt, we have to find ways to mitigate, and we have to start going in this direction. Now, we will then take the information that we get back from those customers as to what's achievable or what isn't achievable, or whether we need to pivot to support a different lever. But that is the general direction, and we won't be sort of moving back from that. But we will be assessing whether we've got those levers right.
So, I mean, obviously, as we've already outlined, you have significant lending exposure to dairy at the moment. So I'm interested to hear, really, will striving to achieve these Net Zero Alliance targets, and indeed, increasing them perhaps as time goes on, will it reduce BNZ's lending exposure to dairy? And then I guess second point on that one is, can a lender like yourselves help bring down emissions whilst not contributing to the demise of a sector that's a really important one to the New Zealand economy as well?
Yes, to your second question. And I think the focus needs to switch from being what's being taken away to the opportunity that exists for us. If you read some of the sort of more nuanced areas, and there was recently an article and stuff, farmers are the best people to know what to do on their farm. The majority of farmers know how the environment is so integral to their livelihood and to the success of New Zealand. So they are all thinking about amazingly different ways of doing this. it will become a bottom-up conversation. So it will become a conversation that relates to each individual farm. So within the context of how the climate is changing, so, is there more rain in Northland? Is there more drought in the Waikato? Like, what are the actual physical drivers that are happening on your land? And what are you thinking about in order to be able to continue to run a viable commercial business, while also adapting to those physical climate changes? And then within that, while you're changing that, are there ways that you can make the emissions that you create from the production of milk solids, can you reduce that? Can you reduce that percentage? And I think what's really important here is that coal is a complete exit. Oil and gas is an absolute emissions reduction, but with power generation and with dairy targets, they're about the percentage of emissions that are being created for each piece of milk solid that's being created. So they're directly related. If you reduce the amount of fertilizer that you need, then that will bring down some of your on-farm emissions, which means that you may still be having the same amount of milk, but those emissions are reducing. So it's about having both a very specific on-farm conversation with that farmer, and then it's about looking at our portfolio as a whole. It may be that by 2050, there are parts of New Zealand that can no longer sustain dairy farming. And we've had those changes over time. This isn't something that has never happened before. We're just doing it with an emissions lens rather than the other lenses that we've had in the past.
In the power generation sector, BNZ's target is a 74% decrease in financed emissions intensity by 2030 against a 2021 baseline. So, whilst the majority of power generation in New Zealand is already renewable, you're assuming in your targets that electricity demand will increase by 50% between 2020 and 2050 due to electrification of transport, off-road vehicles, industrial and building heating. So is this sector actually a significant lending growth opportunity for you over that time period?
Yep, absolutely. And you look at the number of new generation that is consented, that's renewable, so you that have not yet started. So you look at the number of wind farms, you look at sort of the baseload geothermal that needs to happen. There is so much consented generation that just has not started. There are other reasons why that hasn't started, but that is a real opportunity. And again, the more renewable energy that you bring on into the system that is funded and successfully executed, that will bring down that emissions intensity of the electricity sector. So again, sort of driving into the fact that this is not an absolute emissions reduction. The more renewable we bring on, the more that sort of reduces the amount of megawatt hours versus emissions that are created. So yes, this is absolutely an opportunity. And BNZ is very much focused on the opportunity that exists that has not really existed ever before to invest in a completely different way of doing business. And our view is, if the sooner we get clarity on where we want to go and where we want our capital to flow, the sooner we can support our customers to make that change as well.
So looking at BNZ's lending book, or actually any of the big four banks in New Zealand, the biggest lending exposure is, of course, to housing. I think the BNZ lending book, it's 54, 55%, something in that vicinity is to housing. So where does that fit in, I guess, to the net zero targets? I mean, it's obviously not it's not as clear, I guess, a climate issue or carbon emitting issue as, say, coal. But is there something that you're going to look to incorporate it somehow into your targets in time?
Yeah, so the Net Zero Banking Alliance refers to 10 sectors that a bank needs to have targets on. The first set of targets need to be published within 18 months of signing up, and then the remaining need to be published within 36 months. So that means by November next year, we need to have all of our other targets in place. The targets are, so we've got coal, we've got oil and gas, we've got power generation, we've got agriculture. So there are other parts of the agricultural sector, such as sheep and beef, that we will need to set a target for. There's aluminium, there's cement, there's transport, there's commercial real estate, and there's residential real estate. So those are all portfolios that we are now looking at how we what data we use to establish what our baseline is, and then what pathway that we choose to use to then set our targets on. The biggest issue with New Zealand housing is that it's a bit rubbish. From an energy efficiency perspective, it's pretty poor. So decarbonising the power generation sector will actually have the flow-on effect of reducing the emissions that are attributed to residential mortgages. But equally, it's really important that we look at the lending products that we have. So if you have an existing mortgage, is there some green mortgage product or some benefit for us to look at you insulating better or getting double glazing, or how do you start to look at that housing envelope and find ways to more efficiently, or to fund it so that it becomes more efficient and we get those emissions reductions down.
Just in terms of some of the, I guess, the sunset industries, or the ones that are, reasonably viewed as being major contributors to climate change. I mean, we've talked about coal quite a bit. Is there, obviously there's opportunities in power generation, we've discussed, but also with some of the likes, some of those other industries, coal and oil. Is there an element of de-risking going on here that, you don't want to be the lender who's left holding the debt when the music stops?
Yep, that's that's prudent risk management. So yeah, absolutely. How do we make sure that the exposure that we have to these industries that we're not really sure where they're going to go is not so large or material that it's going to impact the wider resilience of the BNZ portfolio, and all banks will be, taking into account the macro trends that they are seeing and making their decisions off the back of that. And I would, from a personal view, I think that we will start to see, as term lending comes off for some of these organisations, it just gets harder, the financing that they may or may not need to do what they need to do. And that's when it becomes really important for organisations or companies to start thinking about, is there a way to transition? So if you are in oil and gas, do you start thinking about having a renewables arm, and will that renewables get funded but the oil and gas doesn't? And how do you sort of manage those two things? So I think one of the things that BNZ committed to a couple of years ago was to have transition assessments for our 50 biggest emitters. We have now completed that, but what that was really useful was that it created a conversation point. We're not saying we're pulling out the funding, but actually, how are you guys thinking about these risks? They are coming, and we need to sort of work out how we continue to support you, but make sure that you're actually taking into account these sort of longer term risks that are going to impact your business model.
Just looking at the Net Zero Banking Alliance, globally, how do you assess its impact? There's, I think the last membership stats, 133 banks are members from 43 countries, $74 trillion in total assets, and 41% of global banking assets. So it's a pretty significant group, but it has come in for some criticism, notably Germany's GLS Bank, which quit in February amid concerns that some of the US banks were still supporting oil, gas and coal projects in emerging markets. So, how do you assess its impact and I guess what it's actually achieving so far?
So firstly, I think any of these initiatives are only valuable if they are interrogated and criticised. Otherwise, it's really easy to sign up, set and forget, not really report on it. I don't think the whole initiative should be condemned on the basis of a group of banks that are making decisions based on their political environment or other sort of geopolitical pushes and pulls. What it does do is requires you to transparently show where you're at. It's much easier for others to provide criticism when they can see what you've done or what you haven't done, and then that can inform how you look to improve. BNZ is tiny based on those figures, but what it does mean is we have access to a group of some of the largest banks in the world, and they have committed to heading in the same direction as us, and they are outside our own economy. So it allows us to have deep and challenging conversations about whether what we are thinking about doing makes sense. You alluded to sort of Rabobank. Well, the parent company has made significant commitments in the agricultural portfolio. Those are incredibly useful learnings for us. So, I would say welcome the criticism, embrace the fact that there is so much more transparency around what people's portfolios look like, what the emissions are, how they're going to be impacted by climate risk and climate change, and assess people on how well they are coming up with a plan to ensure the resilience of the bank in a time of increasing uncertainty.
And where does the importance of being in the Net Zero Banking Alliance rank alongside, I guess, the other moves you're making to try and help combat climate change? I mean, and across the industry more broadly, do you think this is, is this a really important one? Is this one of many things?
It's part of a package. So if you look at how banks are funded, we are connected into the international markets. And what we want to achieve through this is transparency so that it's understood both domestically and internationally. The Net Zero Banking Alliance is an internationally recognised framework. And so the disclosures are required to be set out in a certain way. It means that investors can read it in line with what they're seeing from other banks internationally. And I think from my perspective, the combination of the new mandatory climate reporting regime and the frameworks and the support of the Net Zero Banking Alliance puts BNZ in a really strong position to understand our exposure to climate change risk and opportunity. It allows us to transparently disclose in a way that people understand. And it allows us to properly prepare to support our customers to also transition to both a low emissions economy and the physical changes that come. So what we would refer to as mitigation, which is your decarbonisation, and your adaptation, because we've already locked in change. So I think it's a really strong interconnection of two really important frameworks that we are using.
And obviously, in time, those targets will be, the timeframes for measuring those targets will come up. 2030 is the initial ones. So I guess, we'll get to see whether you've met those or not, and whether you've reset them and made them tougher, etc. Are you confident that these initiatives will prove meaningful to the global fight against climate change? And I mean, obviously, some of you sort of alluded with the US, some of the US situation, the political situation there's a lot of debate's probably the wrong word in the US these days, but there's a lot of, dismissal of some of these moves, not just there, other parts of the world, as, this is just virtue signalling and they just want to make money, it's greenwashing. I mean, how do you respond to all of that?
So on the greenwashing point, the conversations that we have had internally, and I would say the way they have changed over the last 2 years as a result of being part of the Net Zero Banking Alliance and also the mandatory climate reporting regime, we're having conversations that we just never were having before. So that has got to be good. It is financial risk. This is going to have an impact. Look at Cyclone Gabrielle. those businesses and those houses, they're not. I'm down in Wellington. We've all kind of sort of gone on with our lives. There are people that are impacted and will be impacted for years to come by that. So, yes, you could say we're not big enough to do anything. Equally, you could say, I can't sit back and not do anything. And it's those small steps that add up. So I can sleep at night knowing that I'm working with people at BNZ to try and find a way to ensure that we don't pull the rug out from some of our biggest industries. We signal really quickly and clearly where we're going to go. We transparently report on what's gone wrong or what's gone well. We don't purport to know all the answers. And then each year we just move on and welcome the criticism and challenge that transparency will allow.
Well, look, thanks a lot for that, Rebekah. That is Rebekah Cain, who's BNZ's Chief Sustainability Officer. And I'm Gareth Vaughan at interest.co.nz with another episode of our Of Interest podcast.